as it relates to doing a case study on an apartment building that I bought. This property was Mango, and when we got this property, first I want you to kind of take a look at it. So it was vacant when we got it. I got it from a broker. So I called a broker, he and I sat down and had a conversation about properties that he actually had that I was buying. I was looking to buy something. So we talked about another property, which we'll see, which was in Makaha, which is a 17-unit building. This is a 10-unit building. When I got involved in this building, it was totally vacant. Well, let me take that back. The old owner, not the broker, was still living there. They had lived there for a long time. It was only one owner that owned this property. As you can tell, if you look down this way, it's fine if it's not in focus. If you look down this way, this is a business street. So all the buildings here, so there's a storage facility right here. You can kind of shoot that. That's fine. There's a storage facility right here, laundromat right here, restaurant. There's a, they just built a Panda Express. And right behind camera is the parking lot, the actual parking for the storage space. So you guys get the understanding of where this building is located. So in the other building similar to it, it's not an apartment building, it's a mixed-use building. So there's retail on the bottom and there's apartments up top, and that's also owned by one owner. So this building, when we got this building, it was vacant. So the play here was lease the building up, get the property for cheap, lease the property up, and then build the value in the building, right? So the fact that when we first got it, here we can move a little bit over. So when we first got the building, there was no trees there. If you can kind of see in the area, I don't own the building anymore because we sold it, right? There was no trees there. We planted all the trees. We put in the fence right here, not this fence, the new owner did this. I should have thought of that, right? That's way cheaper than the fence I put in. So we resurfaced the parking lot, redid the parking lot. We bust out the concrete and we planted, basically it's like the golf course grass in the middle, a row of palm trees that are now way grown, like super grown. Painted the building, did all that stuff. But on our lease up, it was the main thing. First, get tenants in here. There was not one-for-one parking in this 10-unit building. We picked it up we were under contract initially for $950. My contract time expired with the broker, and I asked for another week of time for $50,000 because I didn't want to let the deal go, right? So we got that stuff done, and I began the lease up. I literally grunt effort this thing. I put up street signs for rent, 1 bedroom, 1 bath, move-in special, all that stuff. And I just negotiated what it was going to take to move people in. I did good leases. So when we initially started, our leases were like $950, $900, and we moved them all the way up to, I think on the exit was $1,100 bucks for 1 bedroom and $1,350 or $1,375 for the 2 bedrooms. Cool. So that took some time because it took me going in and actually project managing the painters, all the people who were doing the flooring and stuff, which we'll go over later, of how to actually increase the value by doing some of these things. So first, what we did, like we said, we locked it up under contract, right? It was really a handshake agreement because nobody wanted to sign a contract at first. I knew that the exterior of the building needed to be done, so I had a plan, which is what I did was I actually had, you know, people who kind of draw, like architect people. Like I went to some place and they just drew up a picture of what the building would look like had we planted trees, had we planted grass, and instead of being dingy white, had it been painted all white, and the parking lot was resurfaced, and we had them draw in the shrubs and the trees and all that stuff. So I gave that to the bank so they can really see exactly what we were trying to do. It was all by design. I didn't just wing it. I didn't go, hey, I'm gonna do this, I'm gonna do that. I actually painted the picture for people, told people, and then I had somebody draw what it looked like because that was a smarter thing to do. Cool. So as we began to lease up the units with 1 bedrooms, because there's 8 1 bedrooms and 2 2s. Cool. I started to lease those up, and I got long-term leases, 1 year, and/or I got like, I think 1 or 2 people I put in on a 2-year agreement, but at a little bit higher lease, and I told them we're not going to raise the rents. And in exchange for you signing a long-term lease, paying a little bit more, we will actually, you know, paint to the color if you want it, like this off-shell egg white, and you get this color of floor tiles that we put down. But we're already going to do the floor tiles. Cool. So as you can kind of tell by that being done, so we entered into contract at $900. We end up closing at $950, right? Yeah, no, $950, and we end up asking for 50 grand. That's what it was for time, and we closed at $1 million. So we had the properties. After the first 3.5 years or so, we refinanced and we took out the initial investment. So it was a no money down deal to my investor, and then we stayed into the deal on the premise that when we resold, we split profit. Cool. We bought it at $1 million, and on our sale price, we turned around and we sold for $1.7 million. and we had already got our initial investment out. So as you guys can tell, I took a look at this from a position of like, hey, when we first got this thing, there wasn't enough parking, like I said. We just came across the street and we got with extra storage, and we were like, hey, how much would it cost for us to lease a 1 or 2 parking stalls to make up the difference? And then we charge that back to the tenants. So that was kind of the play here. So get in there, clean it up, make the outside look good, make the tenants happy to want to move into a place like this, get a good lease in place, make sure that we painted the insides, make sure that they look really good, fresh carpet, fresh paint, or fresh tile. I stuck with tile. I think we only did 2 carpets. I closed and I did what I said I was going to do. That was really it. So when you take a look at what it is that you're going to do to be able to find deals like this, man, this came from a broker. The other deal that we did down the street, which was a 12-unit deal, came from me just driving the neighborhoods because I already had a building in the neighborhood. It didn't make any sense for me to bounce all over the place, right? So, because it's called economies of scale. How many units can you control in one area? And if you control more units in one area, you also control the rents. Meaning like, oh, the whole area. If I change my rents, all the other apartment buildings get affected by the rent changes. So get in, paint it, clean it, redo the parking lot. All we did was resurface it and paint the line so people can park correctly. We got extra parking, just so happened to work because we're across the street from storage. We busted out the concrete because in the inside there was no green space, there was no grass. We busted out the concrete and we planted grass and a row of palm trees, painted the building and made it look really nice, changed like the light fixtures outside and made it good, put up a security gate, and also made sure that the numbers, lighting, everything was good. And that's how we did the building. And with those changes, one, we raised the rents and we filled the building up because it wasn't filled, painting it, making it nice, and then going back and doing the refinance. We went from 1 million on the value to 1.5 on the value, or 1.5 on the value. And then we did a cash out refi and took out our initial investment, kept the property because it cash flowed, covered the debt service, and still had a high debt coverage ratio. And then held on to it for a couple more years, and as the rates began to change and market began to change, talked to my partner and I was like, okay, it's time for us to sell. And then we exited the building and we sold for 1.7, which was the next level of profit. So, man, you can do this. If this was just a deal, now think about it from here. Could I have just flipped this deal to someone else? I got into it for 900 or 950, and then I extended my timeline for 50. Could I have not turned around and flipped this thing for 100 grand for, instead of being at $1 million, I could have been at 1.1 million, 100K for me, and been out of the deal, no big deal. But that wasn't my goal at the time. So, but could you have got this on a contract and assigned your contract to someone else? Hell yeah. So make sure you understand all of the nuances to this deal. And with this case study, my Mango case study, we went from 1 million to 1.7 on the exit. I got all my investors cash out, the initial investment out, and we stayed in the deal for end of game profit when we resold. But this could have very well been a decent deal. You drive up and down, you found it vacant, could have done some work, knocked on the door, talked to some broker, and struck your own deal and say, hey, what if we give you X amount of dollars? Because I closed in 60 days. We'll give you X amount of dollars in 60 days, and find an investor that was interested in taking this contract to be able to close quickly, flip it over to him, make your 100 grand. He still would have been a good, it still would have been a good deal at 1.1, really. But you can do that, driving around, looking at properties, getting in contact with the owners, asking them if they're interested in selling, and then making a price that makes sense for you and the seller, and getting it under contract, starting the process. And whether you're going to exit by wholesaling the deal and flipping your contract to somebody else, or you're going to close this deal like I did, like an assassin, locate the deals, take those deals down, and create huge profits fast. That's how you do it. We did this, the first phase took 1 year of stabilization, and then the next year we were really up in $500,000 in creating value. It wasn't a cap rate play. I didn't go around and shift the cap rates all around. This was literally from the work of that. So you can do this whether you're buying it at a wholesale or you're going to hold on to it for cash flow, equity growth, and turn that money that you got from this one and buy the next building, which is what we did. That's the stuff that you're going to be playing as it relates to being in the Apartment Assassin program with us. All right, man, I'm going to show you way more how to do this stuff, but I just wanted to share with you one of my case studies so you can see that you can do this too, and I wanted to keep this pretty simple. All right, let's do this.